Hello everyone, welcome back to another video. Merry Christmas. And today I'm going to be talking about 5 SPAC stocks that I think are well poised for quite a bit of growth over the next few years, okay, based on different factors, all right? And we have some stocks from all sectors. We have some electric vehicle charging stocks, we have some gaming stocks, we have a cloud company. So let's get into it. I hope you enjoy the video, and if you do, be sure to hit that thumbs up button and also subscribe if you haven't already. So the first one is Newborn Acquisition Corp, and this is an electric vehicle charging stock, but it's in unlike the others, okay? And as you can see, it's down by 4% as of December 24th, and it reached highs of over $22 back on November 25th, where the stock rallied by 86%. And so, you might consider this price point at around $19 a pretty good deal. I sold all my shares, and I don't own any shares of Newborn Acquisition Corp after they ran up by 86%. And I'm not sure if I'm buying any more shares. However, I do think that it attracts a certain type of investor, and it has pretty nice growth prospects. So, what is Nuvve? So, it's a vehicle to grid technology that enables the linking of multiple electric vehicle batteries through EV charging stations into a virtual power plant, and this provides bidirectional services to the electrical grid in a qualified and secure manner. So, pretty much what this means is that what they plan on doing is, now that the world is transitioning to EVs, and you need EV charging stations. And if all the electric vehicles are charging at the same time, then this is going to put tremendous strain on the electrical grids. Okay, so what they want to do is only, of course, store the electricity and then in the car, and buy electricity when electricity is cheap, so on the off times, and then sell the electricity back to the grid at the peak times, okay? And this will work well, let's say, with school buses when the majority of the school buses, let's say, are done at 3, 4 p.m. And the peak electricity time, let's say, is like at night, then it'll actually wait to charge these electrical buses until midnight when electricity is cheaper. Okay, so this is not a new concept. I believe Tesla was trying something like this, but it wasn't as successful. So there's a lot of concern about if this technology will actually be adopted, this vehicle to grid technology, and it's a really cool concept. But I think it'll only work if you have let's say 5 to 10 or 50 vehicles lined up, right? So it only works with like fleet vehicles, and not necessarily with just regular charging stations. Okay. And I actually had a comment that was asking, okay, what are my thoughts now on NBAC and Nuvve? By the way, Newborn Acquisition Corp is going to reverse merge with Nuvve, and Nuvve is the name of the company, right? And that's what a SPAC is. It's a reverse merger. So he's asking that the V2G, so vehicle to grid integration, is a proposal for EVs that only Nuvve/NBAC is proposing. The market didn't seem very confident about this for the last month, but coming back to its highest price is showing us confidence from the market on this tech. And he's like, once it breaks its highest price at around $22, it's going to ramp up at least 50% since it is the only player offering this. And what are my thoughts on that? Well, to be honest, since this is a very specialized solution and this company is the only one doing this, I do think that there is potential for the stock to rally, especially since right now there's a lot of exuberance in the market on electric vehicle charging stations, right? And we look at something like Switchback Energy Acquisition Corp, which is going to merge with Chargepoint, and you can see this stock has rallied by over 343%, right? And it's not even trading, the merger has not even happened yet, right? So there's definitely a lot of optimism on the market on these electrical charging stations, okay? And NBAC is definitely one of these specialized players that has the vehicle to grid system, okay? And I mean, I do think that this stock might rally back to its $22 level. I don't think it will go past 50% after it reaches new highs. But it is a stock to watch out for. And I mean, if it goes down even more, I might have to put in some shares again and watch this stock rally. Okay, but you have to be careful with these SPACs because you could gain a lot of money, but you could also lose a lot of money, and they fluctuate um, by quite a few percentage points each day potentially, right? Like one day they're up 50%, the next day they're down 50%. Okay, so I do think this is a really cool solution, and this is definitely a smaller company. and this company boasts that it has higher compounded annual growth rate compared to Blink and Chargepoint, and also better enterprise value to revenue estimates. This is a really cool company, and I really like what this is doing. Except I do think that, $18, $19 may be a fair price point, and I might consider buying it if it reaches maybe the $17 range. Okay, and finally, let's just look at their revenue. So in 2017, they had $720,000 in revenue versus 2018, 1.5 million, 2019, 3.4 million, and so on. And for 2020, they're expected to have estimate anywhere from 5 million to 6 million, and 2021, 32 million, 2022, 93 million in revenue. Okay, so that's pretty impressive. But again, just know that these are just estimates, and they may or may not hit those estimates. Okay. And so the second stock I want to talk about is I actually own some shares of this, and it's called Apex Technology Acquisition Corp. And this is reverse merging with AvePoint, okay? And it's a cloud software company that's mainly focused on Microsoft solutions, okay? Providing, software as a service to Microsoft and the cloud, okay? So I bought this company when it was trading around $14.20. And so, now I have a nice healthy 14% gain, but I'm not selling my shares anytime soon, okay? And I really, really like this stock. This stock took quite a hit when they announced a lawsuit against Weiss Law LLP investigates Apex Technology Acquisition Corp. And their stock took a hit because of this investigation. However, these lawsuits are, so frequent when we're talking about SPACs that to me it didn't really phase me. And definitely, it definitely is a concern, but it's just very common for lawsuits to be investigating these SPACs. Okay, and why are they investigating them? Well, they're investigating possible breaches of fiduciary duty and other violations of law by the board of directors of Apex Technology. Okay, but again, I'm not concerned just because I do think that this is a solid company, and I think this is the only SPAC I own, by the way. And the reason why is because again, I do think that this presents the most attractive price to valuation type deal, okay? And I do think that their revenue growth is quite impressive, and they're already an established company, okay? So let's just read over the transaction description. So AvePoint and Apex Technology is going to combine to create a publicly listed company with a 2 billion market cap, and this transaction is expected to close in the first quarter of 2021, okay? And 21% of public shareholders will be represented from the SPAC Apex Technologies. Okay, so that means we pretty much own 400 million of the 2 billion market cap. All right, and right now we can see that this company is valued at 727 million. So definitely, trading at a bit of a premium to what the slide deck shows. But again, when you're getting into these smaller companies and early on, sometimes they do trade at a premium. However, I do think again that out of all the stocks that I'm talking about today, this one represents the best deal. Okay, and again, we're going to go over why I think that is. Okay, so what is this company? Well, it's the leading data management solutions provider for the Microsoft Cloud. Okay, it has a total adjustable market growth that's going to be expected to grow by 33 billion by 2022. It's already large and established. It has a global presence, so it has over 1,300 employees in 29 global offices. It has 7 million cloud users, over 16,000 accounts, and it has compelling growth factors based on the research and development and branching out into other spaces. Okay, so in 2020, their expected revenue is 148 million. Again, so I already like this as an established company that has good growth prospects and is not just, based on um, uh, projections for growth. Okay, I like that they already have revenue in place, all right? And quite a bit of revenue, 148 million, okay? And again, when you're investing in the cloud, this is a company, and generally, in general, it's not like electric vehicle stocks or even electric vehicle charging stations. You have very high margins on when you're investing in cloud, right? So every dollar in revenue brings in more in profits, right? And which we're going to look at some numbers, okay? So again, their main point is that all organizations need help managing their data, okay? So the amount of data is growing fast. Data governance is hard and getting harder. And cybersecurity is a real risk, okay? And as more and more people are transitioning to the cloud space and using cloud software, this is going to become bigger and bigger, right? And I do think that this, out of all the five, is the real winner, okay? And again, let's just go straight down to the numbers, okay? Let's look at their financials, okay? So we can see that their revenue over revenue growth every quarter is increasing by quite a bit, okay? So in 2019, the first quarter, $75 million of revenue, and in second quarter of 2020 they had 101 million in actual revenue, okay, and these are based off of real numbers, right? These aren't just projections anymore. And their previous quarter in Q2 2020 represents a 29% increase in revenue over the past year, all right. And here, I just want to take a look at their margins. Of course, you can take a look at their expected revenue. So 2020, 148 million, all the way to 2022, 257 million, okay, which is 33% growth rate. Again, these are just projections, especially for 2022, but I do like how they already have solid revenue growth to back up these projections, okay. However, when you're looking at a company, you want to also look at their margins, which means how much of every dollar in revenue is going down to the bottom line, to the profits, okay? And already in year-to-date 2020, their percent margin is 71%, okay, which is really, really nice. That means for every dollar in revenue, you're getting 71 cents just coming straight to pretty much close to the bottom line, right? Well, we would have to look at the profit margin, but gross margin is a pretty good indicator as well, right? And so 2019, they had 69% in gross profit margin. 2020 expected they're going to do 72%. And finally, in 2022, 74% in gross profit margin. So these cloud software companies are, they have very high margins, and a lot of those revenues are going to be retained in profits, which is, again, the main reason I like Apex, and I like, again, that they're established. And this is, for me, I think, the real winner. Okay, so let's move on to the next one. And this one is CIIG Merger Corp. Is going to reverse merge with Arrival, a UK-based electric vehicle bus manufacturer, and we can see it's had quite the run up. And I mean, this was all here. The first move was just based purely off of hype, over 167% gain. Then it retract by about 27%, back down to $19. And then this whole here was again based off of Jim Cramer coming and saying that, Arrival is pretty much maybe the UK of Tesla of UK or something like that, or Tesla of buses or something like that. So this stock has had a significant run up since Jim Cramer came on and boasted this stock. Okay, and so now this stock is sitting at $31.54. All right, and again, this stock is way overpriced for my liking. And I mean, I like what Arrival is doing and what this company is about. And I mean, what they're really playing at is in electric bus, electric van, and small vehicle platform sector. Okay, so it's not trying to compete mainly with the Tesla, although Tesla is coming out with semi trucks and stuff. But we can see here, they're expected to have four products here: the electric bus, electric van, large electric van, and small vehicle platform. Okay, and you can pause and go through all their ranges and all their stats there. And I like that they also have partnerships with UPS, Hyundai, and Kia Motors. So here they have the commercial and strategic partners, and they have orders worth of 1.2 billion for 10,000 units plus an additional option for 10,000 units. Okay. However, we know how risky pre-orders can be. All right, they say all these great things about pre-orders, but you have to consider that UPS at any moment could cancel pre-orders if, let's say, they find a better deal with, for example, Tesla or Nikola. Although that's a complete joke. I don't think Nikola is going to be having many orders. Nikola actually just canceled, or a company just canceled a large order of trucks from Nikola, garbage trucks. So that shot their stock price down. So what I'm saying is that, although they may have commercial partnerships and pre-orders worth 1.2 billion, that doesn't actually mean that it's going to translate into actual revenue. Okay. That being said, though, investing in it now may prove to be profitable if these deals actually go through, because the deals would shoot the stock price going like way up. Okay. And I mean, this is definitely a stock that you can check out on your own. I mean, it's saying it's the best in class in terms of it's the lightest, it delivers the highest payload, and it's relatively small, it's sleek. I mean, their vehicles are really, really nice looking, okay? However, we can already see with the whole Nikola situation, that making an electric vehicle is very cost intensive, um, and the margins on that are really low. So you need a lot of upfront capital to uh, grow all these buses and to actually manufacture all these electric vehicles. Okay, and what I like is that they have micro factories which they'll actually be able to use them in order to sort of repurpose each microfactory to not just create one or two vehicles, but they'll be able to create all the vehicles that they propose, just based on the demands of each of their products. Okay, which is a really really cool concept. All right, and if you want, you can go down through their investor presentations and look at each of their factors. And I mean, I really really like what this company is doing. You can even compare the amount of employees it has, which Arrival has 1,400 employees versus something like Helion has 60, Nikola has 250, and Workhorse has 115. Okay, so um, really cool projections and really cool company. However, I think it's a bit too risky compared to something like an AvePoint, which I think will do tremendous for me. So I'm going to wait on the sidelines for this stock. However, you might consider investing in it if it ever reaches back down to like $20 levels. Okay, once all the hype on EVs is over. All right. The next stock is involved in the EV game, not EV, involved in the gaming sector, but the online gaming sector. And this company actually, I believe, already did their merger. It used to be Eagle Acquisition Corp, but now it's just Skillz. Okay, and it's an online mobile multiplayer competition platform, and it's integrated into a number of iOS and Android games. And as we can see, it's done quite well over the past 6 months. Just since October, it's up by 58%. And I actually sat on the sidelines on this one, and I could have gotten down shares when I made a video on it previously when it was $16, but I didn't. And now I think I might have to wait if it ever goes down to like $18, $17 again to pick up some shares potentially. But I do like what this company is doing. As we can see here, Skillz becomes the first publicly traded, mobile esports platform. Okay, and it has very very interesting investor relations page, and it talks about it's fulfilling a human desire for online competition, but not doing it through, again, physical competition, but online competition. And we see that this company is very sticky. Minutes per day per user for Skillz is 62 minutes, versus something like TikTok is 52 minutes, and for the mobile gaming average, 17 minutes. So it's a very sticky platform. And if you want, I'll link my video that I did on Skillz up here somewhere. I did a pretty in-depth video on that and talking about their business model. And they have very, very interesting revenue projections and very interesting model that actually allows game developers to gain more profit from actually providing their games on the Skillz platform, which also makes for better content and makes for more engagement as well from developers and users of the games. Okay, so really, really cool. Okay, and finally, we have to talk about Switchback Energy Acquisition Corp. And this is by far the largest charging stock out there, as far as I know. And look at this move, 345% in the span of just a couple months, right? And I think this is overblown. Okay, I am not touching this stock until it goes back down to maybe even like potentially even like $30 below $30, because I think this move is just it's just all hype. Okay, according to me, we can look at the market cap of 3.49 billion, and this is still, they haven't even merged yet with Chargepoint. Okay, and so Chargepoint to become a public company, advancing EV charging networks reach across North America and Europe. Okay, and don't get me wrong, I really like what this company is doing. I really like their business model, and how it even has like software as a service type revenue, which means recurring revenue. And so, of course, we know that the trend is towards the electrification of cars and large transport vehicles. And what their business model is, of course, is these charging stations, but also offering software as a service for their platforms. Okay, and we can see that they have a large amount of partners, including stuff like Tesla, all the major automakers, Ford, GM, um, BMW, Nissan, right? So it's working with a large company base, okay? And it's talking about the EV penetration, which you can pause and look at. But of course, we know that EV is just sooner or later that they're going to be dominating the market, and then internal combustion engines will just be, those cars will be non-existent. Okay. Um, and if we're looking at their business model, what I like is that they sell hardware, which are of course the stations. They sell recurring software and services. Okay, so they have software as a service annual subscriptions. They have vehicle scheduling and fueling optimization subscriptions. So they're going to be selling, of course, their app with the stations, so that you can say who's using their stations, how they can use their stations, and how to get the most benefit out of their charging stations. Okay, so I really, really, really like what this company is doing. Okay, and if we're looking at their income statement, we can see that their revenues were $144 million. However, their net loss was $134 million. So what I already like is, of course, that they already have revenue coming in, and they're projected to grow exponentially. And again, I do like where this company is growing. However, I just don't think that this current stock price warrants me buying it. Okay, maybe if it goes back to around $30, I'll consider. All right. And again, with Skillz, again, if it goes back down to like $17, I might consider buying. Um, CIIG Merger Corp. Again, if it goes to $19, I might consider buying. Apex, I already own shares of, and Newborn Acquisition Corp. I'm even considering buying at these levels. Maybe if it goes down to 18, I'll consider adding some more shares. Again, thank you for sticking through this behemoth of a video. I wish you all a Merry Christmas. Again, don't forget to give it a like and subscribe if you haven't already, and I'll see you in the next one. Take care, guys.